The stock market is going crazy, oil just crashed again, and people are talking about a potential real estate crash. Do you know what to do with your money? What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. In March, the Dow Jones fell around 10,000 points at record-breaking speed. In April 2020, the stock market recovered about 50% of its loss, which is the fastest growth we've seen in the stock market since 1938. And on top of that, an oil agreement was signed, which people thought would fix the oil crisis, but then after that, oil prices tanked to new multi-decade lows. This would make any rational person scratch their head because, well, nothing has really changed between March and April. If anything, the economy got worse, yet the stock market rallied. What the? If somebody sees a 10% return on their money over a year, that's considered a very good return. The stock market has rallied almost 30% in less than a month. That's pretty insane. Earlier this year in 2020, before this whole pandemic started, I talked about how I was selling my investments in 2019 and early 2020 because some things just weren't making sense in the economy. Well, a lot has happened since then. The stock market broke record highs in February, then we broke record lows in March, and then we had a very confusing April. So I wanted to give an update of what I'm doing right now because things have been absolutely crazy in the financial world. So make sure you watch this video until the end because you want to know what might be coming next. But before we get into that, hit that thumbs up button below because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too because if you don't, then YouTube doesn't let you know when the new videos are released. Let's get right into it. How is it possible for the stock market to recover 50% of their losses when the country is still in lockdown? You have major companies like Neiman Marcus and JCPenney publicly talking about bankruptcy, and people don't have money to pay their rent or mortgage. It makes no sense. Well, that's because the stock market isn't always rational in the short term. Plus, you also have the Federal Reserve Bank committing to print an unlimited amount of cash to keep investments and companies alive. Remember, the stock market and the economy are similar but different. The stock market is a place where people go to invest their money based on what they think is going to happen in the economy in the future, plus some emotion tied in it. The economy is whether or not you're getting a paycheck. And when I say paycheck, I don't mean stimulus check from the government. And while there are talks of the economy opening back up, we are not in the clear yet. Our economy still has to face some of the biggest hurdles yet. Now, before I tell you what I'm doing, let me just remind you, investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So always do your own research before you invest. And don't just blindly listen to a random guy on YouTube. You talking about me? Random guy on YouTube? These are just my opinions and I could be completely wrong. When this economic crash started in March, I talked about how I was drip buying stocks and ETFs. I don't try to time the market because, well, that's impossible. And the people that do try to time the market usually end up missing great buying opportunities on the bottom and great selling opportunities on the top. What I do is a little bit more systematized. I buy in phases. So I have a list of companies and funds that I want to invest in, and when one of these companies or fund hit a low buying price that I like, I buy, but I don't buy all at once. And then if this company or fund drops another 5 to 10%, I buy more. This way I'm buying gradually instead of trying to time the market, and the further down something goes, the more aggressively I buy. Well, after doing this drip buying, I actually just sold some of my positions because I was fortunate enough to see huge gains way faster than I expected over the last few weeks. I am not a trader by any means. I'm an investor who likes to invest for the long term, but to see 20 to 50% returns in just a few weeks and not sell would be kind of foolish, especially with how uncertain the future of the economy is right now. If you look at history, you'll see that most stock market crashes have three phases. You have the panic selling phase, then you have the relief rally, and then you have the demoralization phase, which is the second drop. Normally, when people say, oh, this time is different, it won't happen this time, history ends up repeating itself. But this time is actually kind of different because we've never seen a pandemic underlie financial issues like this before, so it's really hard to predict what's coming next. Maybe the stock stock market will shoot straight up. Maybe the stock market will come back down. Maybe it'll stay sideways for a long time. There's no way to know, which I know is not what you want to hear, but we can look at the economy to give us some sort of indicator as to what's coming in the economy. I can guess that our economy is going to see a very rough at least few months. And this is what we're trying to keep you up to date on our YouTube channel almost every single day. So if you haven't subscribed yet, you should do that. The tricky part is that the stock market and the economy don't always move in a straight line. That leaves me with three possibilities. One, if the stock market comes down again, well, I'll be okay because now I have more cash that I can use to buy again. Two, if the stock market shoots straight up, I'll be okay because, well, I made a profit that I'm happy with. And three, even if the stock market goes sideways, I'm still okay because I have cash on hand to take advantage of other opportunities, which I'll be talking about later in this video. History has showed us that over the long run, the economy, the stock market, and strong companies go up. So there's plenty of room for a stock market to grow still. We just don't know how much volatility is going to be there between that. I want to go over briefly what's happening in the economy right now because I think that'll make things more clear. But if you do want to invest in stocks or companies through the stock market, you can do that, but you need to use a stockbroker, and that's very easy thanks to our sponsor Webull, and I got their link in the description below. With Webull, all you have to do is open up a free account, fund your account, and then you can invest in whatever stock or ETF you want, and you don't have to pay a penny in commissions because they don't charge you any commission fees. They are a commission-free broker, so you can use your money to invest instead of making your broker richer. They make their money through margin, which is debt, but you're not required to use margin. If you find a company you like, you can research the company and see if they pay a dividend and stay up to date on that company's news, all on their app. And the best part is that at the time of me recording this video, Webull has a limited time promotion going on where they are giving Minority Mindset fans 2 free stocks just for investing with them. So if you want to learn more and see how you can get your free stocks, I got the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's free to open an account and you don't have to pay a penny to make a trade. So if you want to learn more and see how you can get your free stocks, I got the links to where you can do that in the description below. The United States is talking about opening up the country and opening the economy back up, and some investors are really excited because they think the world is going to go back to normal, but I don't know how immediately that will happen. It is becoming more and more probable that when the economy does open up, people won't be ready to go out and start spending money and shopping like normal. So that means our economy still has to face its biggest test yet, and the next 60 days are going to be very important to see what's happening in our economy, because that's when all this government life support, aka free money, is going to start disappearing. But that's not the end of it. Social distancing isn't just going to disappear when the lockdowns end. Ugh, 6 feet please. That means businesses like restaurants and stores might have to limit their seating capacity or their shoppers' capacity to comply with these social distancing rules and measures, and they're going to have to pay more money to keep up with all this extra sanitization and cleaning costs. That means these businesses could be seeing higher costs with lower revenues. Not a good combination. You have this oil war going on that just keeps getting worse. Back in March, Saudi Arabia and Russia started an oil price war, and then everybody thought that this oil war would be finished when an agreement was signed in mid-April. But then after the agreement was signed, oil prices started tanking to new lows because we realized that this agreement really wasn't that good. We've already seen some energy companies go bankrupt because of this, and that means we could be seeing even more energy company bankruptcies over the next 12 to 18 months. You had this retail apocalypse put into hyperspeed because people don't want to go into malls, and other malls are locked down, and so you have stores like Neiman Marcus, JCPenney, and GNC openly talking about bankruptcy. Gucci's gonna be okay though, right? And then to top it off, you have banks changing the lending requirements to buy a home. JP Morgan Chase Bank, who is one of the largest lenders in America, said that if you want to get a mortgage through them now, you're gonna need a minimum 700 credit score and a minimum 20% down payment. In a normal world, a rational person would hear that and they would say, wait, what's the big deal? They just want to give mortgages to people who can actually afford them. I don't get it. Well, the world isn't always rational, and I guess that's why we are the minority mindset, because we don't think like the majority of people. The reality is you have a big chunk of buyers out there who don't have the cash to afford a 20% down payment and who don't have a 700 credit score. So if you have less people that can qualify to buy a home, that's gonna hurt real estate agents, mortgage brokers, and title companies because, well, you'll see less people buying homes. Couple that with the fact that millions of Americans don't have the cash to afford their mortgage payment or their rent payment right now, which is why you have some people in government that are proposing paying everybody's mortgage in America and everybody's rent for who knows how long until this whole pandemic is over. I don't know what the government's gonna do, but what I do know is that you have a lot of people struggling to make their rent and their mortgage. Now, couple that with the third punch to the real estate industry, less interest to actually buy a home. We know that when people are scared of losing their job or they're scared of a recession, they put off buying their dream home. And now add to that the fact that people are scared of getting sick, and there's a good chance that people will be less interested in buying a home, at least for the short term, because of all these factors. Again, I can't predict the future. I could be completely wrong on everything. Random guy on YouTube doesn't know anything! But if the country opens back up and the economy stays slow for a long time, the real estate market is gonna get hurt over the next couple years. The thing is, real estate prices don't fluctuate as fast as things in the stock market do, because you can't just go to your computer and hit a few buttons and then buy one property and sell a different property in less than a minute like you can in the stock market. So real estate tends to have a lag time behind the stock market. I showed this example in a different video, but during the 2008 crash, the stock market really tanked in 2008 and it hit its bottom in 2009 before it started to recover. Well, the real estate market really didn't start going down until 2009, and real estate prices didn't hit their bottom until 2012 before that started to recover, and by 2012 the stock market had already recovered quite a bit. So if the economy stays slow for a long time, and if the government doesn't magically pay for everyone's mortgage and rent for the rest of the year, and if the demand for real estate goes down, you can expect the real estate market to get hurt. I know that's a lot of ifs, but it will create a huge buying opportunity for those of you who want to own real estate. I am a real estate investor more than I am a stock market investor, so this is something that I'll be keeping my eye on, and it's something you should be keeping your eye on too. And if you're looking for an easy way to stay up to date on what's happening in the finance and business world, well, that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money, and we will email you this newsletter for free every morning, Monday through Friday at 7:30 a.m. Eastern Standard Time. You can get a newsletter for free by clicking the link up here or by clicking the link in the description below. And by the way, these financial news emails are different from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about this oil crisis that's going on, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.